Are you new to the stock market, or perhaps you've been trading for a while but certain concepts still confuse you? Whether you're a rookie or a seasoned trader, understanding the fundamentals of the stock market is essential. It's a world where knowledge is power, and lack thereof can cost you. It's important to remember that investing without a clear understanding can lead to unfavorable decisions and potentially financial losses. Remember, incorrect knowledge can lead you to make unfavorable decisions. One common misconception is that a 10 rupee stock is cheaper than a 1,000 rupee stock. This is a dangerous assumption. Stock price doesn't reflect its value or potential for return on investment. It's merely a number, influenced by numerous factors, including companies' overall health, profitability, and market conditions. A safer alternative, especially for beginners, is investing in index funds which spread risk across a range of companies. Don't let the price tag fool you. It's the value that matters. Another misconception is that any random stock can double or triple your money within a few years without any logical reasoning. This approach is akin to playing a risky game of chance rather than a strategic investment. It's crucial to understand the business behind the stock, its future prospects, and the logic behind its potential growth. Investing in stocks without this understanding is like navigating a ship without a compass. Remember, investing isn't about taking wild guesses, it's about making informed decisions. Investing in the stock market can be rewarding if done right. By slowly and consistently investing in index funds, you can generate returns between 13 to 15% over the long term. This strategy is not about quick wins, but about building wealth steadily. So it's time to let go of misconceptions and adopt a logical approach to investing. If you found this video helpful, please subscribe to our channel for more stock market related videos. Together, we can navigate the world of investing.